Good morning, everybody. Mike Vaki, Princetontrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we've seen is we saw a little bit of a bounce on Friday. We had our 5 down days into the lower Bollinger Band, as low as 1970. We had been looking at this 1984 half area as fairly critical area with respect to being able to hold. The inability to hold that area has me very skeptical that we will not still go down and test 1961. So what we saw a bounce on Friday, which we were very due to get a bounce. Not much yesterday. I mean, these are two combined sessions essentially as it is. We're now seeing it push up into the 50-day exponential moving average up at the 2025-2026 area. You'll recall that last week 2026.60 was the weekly pivot, and that had proved to be critical resistance, especially on Thursday. Okay, Thursday was a failure at the weekly pivot and 50-day exponential moving average. So we're back to that area. The highest probability outcome on my stuff is that we continue to move higher from here to test, maybe not today, but in the next couple of days, the middle Bollinger Band, the 20-day simple moving average, which at the moment is sitting at 2038.88. That will continue to edge lower due to it's shaking out of some of these prices. So we should see it, kind of level off to head a little bit lower. And I see us engaging that line, and that is the true high noon moment for the market. That's when the market's going to decide, does it want to be a market that is trading below the middle band, which is a sell rallies market, or does it want to get back over, establish the middle band as support, and then we go back into our typical buy the dip. What it's been saying to us recently is that it wants to be below the middle band. So I'm looking for a test of middle band this week that is most likely to fail and potentially act as a fairly nice sell rally area. If we get back up to middle band and you want to sell rallies, I mean, it's a nice area to do it. We did a very similar trade back in October that failed at middle band and then went ahead and yielded the test of those 1813, to 1815 lows. So, I say sell rallies. You can't sell rallies without a rally. And what we've got here is a bounce. Continue up today, it turns it into a rally. Now, how do we know it's not a V? Well, we don't know it isn't a V like the last time. Bounces turn into multi-day rallies, which then turn into, V rallies because, the bears slowly get knocked out at every turn. Well, right now, we're at one of those key areas, the 50, okay? If we lose the 50 and the 20, the chances that we go back and make new highs are pretty good. Now, having said that, we took out the 50 and the 20 here, and then we gave it right back up. And the bears being able to step in and establish this lower high and then a lower low versus this low, that is literally the most bearish thing that's happened in the market since 2012 on my chart. So we'll have to see. I'm still advantage bears. This is a rally, and it's a rally that I'm looking to sell. All right, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, Princetontrader.com. Come check out the chat room. The chat room is now web accessible. It is available for viewing on tablets and mobile devices. We're very excited about this. Being able to take that desktop software and have it so that at least you can read it when you're out and about on any kind of device is something our subscribers are very excited about. We got people coming in all the time now, that want to take that trial and see some of the new stuff that we're doing here. So we're excited. Everybody have a great day. I'll be back tomorrow morning with another webcast. Trade them well, everybody.